Hi, this is John Prasinos, Editorial Director of Investing Daily, with a video presentation for Monday, February 1. Stocks last week posted their biggest weekly loss in 3 months, as volatile trading continued amid growing worries about the coronavirus pandemic and economic recovery. The battle between amateur investors and giant hedge funds over GameStop also weighed on the markets, as investors feared that speculation in risk-on assets was running rampant. The GameStop headlines are likely to fade one day, but they've revealed underlying market imbalances. Stocks have started to pull back after reaching unsustainable heights. Last week's negative performance in equities doesn't necessarily herald a prolonged market downturn, but events do indicate that we're facing a period of volatility and caution is warranted. Take a look at the following chart. Unless you live in a cave, you've seen the crazy action over the stock of GameStop. The struggling video game retailer has become a household name. Here's some quick background. Users on the Reddit channel Wall Street Bets noted that GameStop's stock was heavily shorted and decided to scoop up shares to drive up the price and force the hand of short sellers. GameStop has been ailing along with many other retailers, and its management has been trying to turn around the company. Hedge fund short sellers were betting against the company's chances. The Reddit revolutionaries decided to punish the pessimists. Chatter quickly spread and GameStop's stock exploded on the upside, rising high enough to force the huge hedge funds to jettison their positions and lose billions of dollars. By Wednesday, January 27, GME had gained more than 700% over the course of 4 trading days, a success that motivated the insurgents to target other heavily shorted stocks, such as theater operator AMC. On Thursday, online brokers used by retail investors blocked trading of the targeted stocks, allowing users only to sell their shares of so-called meme companies, such as GameStop, which subsequently tumbled. The following chart shows the roller coaster action of GameStop. After angry complaints from the public and lawmakers, several brokers, notably Robinhood, rescinded their decision. The GameStop rally reignited Friday, with the stock soaring nearly 70% for the day. The scheme's originator on Reddit claims to have turned an initial investment of $50,000 into more than $40 million. Melvin Capital, one of the hedge funds that had shorted GameStop's stock, was forced to beg for a $2.75 billion bailout from 2 other investors after it got clobbered with huge losses because of the short squeeze. It's unclear how this David versus Goliath story will ultimately pan out. One thing is clear, though. Reddit's online rebels expose vulnerabilities and inequities in a financial system typically dominated by the big boys on Wall Street. With the Democrats in charge of the White House and both chambers of Congress, we might see new regulations come out of the GameStop saga. The pitchfork-wielding investors on Reddit perhaps set in motion lasting changes to institutional investing. Meanwhile, Federal Reserve Chair Jerome Powell on Wednesday cautioned that the U.S. economy is still, quote, a long way from a full recovery. The U.S. Central Bank vowed to use, quote, its full range of tools to support the U.S. economy in this challenging time, end quote. The Fed's warning, combined with disappointing economic data and the persistence of the pandemic, contributed to the pessimism last week on Wall Street. The U.S. Bureau of Economic Analysis reported on Thursday that U.S. real gross domestic product growth increased at an annual rate of 4% in the fourth quarter, down from 33.4% in the third quarter. For the full year, real GDP decreased by 3.5% compared to 2019, representing the sharpest annual decline since 1946. Take a look at my third chart. The pandemic-battered economy still struggles, underscoring the need for another round of fiscal stimulus. The Democrats who control the White House and Congress are likely to soon deliver a major stimulus package, which should provide a long-term tailwind for equities. But over the near term, buckle up for more volatility. The U.S. House pledges to hold hearings over the GameStop controversy. We'll see how Wall Street responds. Well, that's it for now. If you want to reach me, I'm easy to reach. Just send an email to mailbag@investingdaily.com. Stay safe, and thanks for watching.